Let's talk to Craig Irlam. He's a senior market analyst at Oanda. Craig, very good morning to you. Let's talk dollar yen. You sent a chart. Without further ado, that looks very complex. So this Ichimoku, what are the Ichimoku cloud charts telling you?
Well, this is the problem with these cloud charts. It does make the chart look a little crowded, not clouded. This is more of a follow-up to last week's video. We talked about this, and I talked about that 111 level being key because there's a number of reasons. One, it was the bottom of the cloud, so you're moving from bullish to bearish territory. It's the most basic thing about the cloud charts. While it looks complicated, one of the key things it tells you is whether you're in bullish or bearish territory.
But is it fair in terms of the Ichimoku, anyone watching for the first time, they're very good in trending markets, but in trendless markets, not very good.
And that's one of the pitfalls that we've got at the moment, because if we're looking back over the course of the last year, we've kind of been in a long-term sideways trend. The range has been quite significant from around 108 through to 115, so we're not talking small ranges here. So it has been less effective, but it does just give us a signal really from high point to mid point to low point. So the high point being 115, the midpoint being around those 110s, 111s, and then lows around the 108s, 109s. The fact that we've broken below the cloud would suggest we're possibly heading back towards the kind of 108 levels, 108.80 being the first level of support, and then 108 below. But what I think is more significant this time is you can see the moving average band, which I've got on there as well. That's the 200 and 233 moving average band, and the 233 in particular has actually followed as support throughout this period of moving above and below the cloud, and that's been broken on this occasion as well. We're now seeing that tested from the below, so we're looking for real confirmation of that break. And I think should we rotate lower off those 111s, we're actually rotating lower off the cloud and the 233, which has failed to break until now. So that could potentially be a significant bearish signal.
So just to wrap up, key resistance level, key support level for you?
Key resistance level now is 111, key support is 108.
108. And for choice, which way would you be positioned?
I can't say personally which way to go, but I think I would say that things are looking relatively bearish right now, especially if we get a rotation off 111.
Craig, as always, thank you very much for your time. We'll see you next week.
Thank you.